Happy New Year if we haven't spoken yet. This is Sunday the 5th. This is about perspective at this point. The perspective is what makes the expectation, and then that's what drives the reaction. Starting with the shortest time, Friday. An incredible rally from the bottom of Friday, about 2% from bottom to top. The reaction is the bulls are back. Well, to that I'm saying they never left. Again, perspective. Zoom out to a larger perspective, you'll see that we're still 2%, 2.5% away from an all-time high. So that's the perspective we're going to talk about this week. Because as hard as a bounce this was, it's just halfway from the drop that was on the 18th. Let's talk about taking out the 18th of December before losing the 20th of December. So now we have the perspective. Traders, this is heaven. We're trading. Credit call spreads will work. Credit put spreads will work. Going long or short, however you usually do, but tactically, based on a chart, will work. Piling in without a lot of luck, the horizon better be super long. Here is the SPX on a daily basis. Clearly shows the strength of the bull overall. Here's the same chart on a 30-minute basis, clearly shows the chop, the fight for control. And you can see that it's starting to look like a head and shoulders. If we lose last week's low, it's an important spot that will have continuation down towards the 56 or 5700. Monday, Tuesday, we'll see if they can take out another 1.6, 1.7% rally in the SPX. The job for the bulls is easy. They just need to defend 58.28. We look at the Nasdaq. Daily chart again shows the supremacy of this index because it's driven by the mega caps. It's going to be hard to destroy. This is a bearish setup. That red W shows that we can drift down towards 585 or 567, and it would be normal price action. Zooming in closer for the tactical trades, just like the SPX, it needs to hold the low from last week. Otherwise, it's going to come down to 486. And the opportunity on the upside is pretty close and a little bit clearer than the SPX. 532 would probably trigger a target that would take out that prior fail. This is also the Nasdaq. I just wanted to show you the performance on Friday, how strong it was, but only to get back into the forecast that we had, which is the orange box. All week we were drifting below the target and the bears were winning until the last minute on Friday. Again, perspective. Believe it or not, these guys, the small caps, have done the best with regards to the forecast from last week. The financials are important for this gang, therefore you need to focus on the XLF. Mainly the top companies in it are JP Morgan, Berkshire, Visa and MasterCard, Bank of America, Wells Fargo, and Goldman Sachs. The lines for this week, Monday, Tuesday, the bulls want to take out 2350 on the RUT, better yet 2375, so they can clear the 1218 disaster. All of that needs to happen before they lose the low from the 20th. So the bulls need about 3.5 to 3.8% rally in the next couple of days, and they can get over the hump. As far as catalysts, I believe we have probably 10 Fed head speeches, and we have the Fed minutes on Wednesday. These are past events, but people focus on them. On that note, I'd like to refocus your attention onto the TLT. This line needs to hold. The mathematical response to this dropping is higher rates. So that would have to come from a pretty bad inflation report, which we don't have next week. We will have labor. ADP, I believe, on Wednesday, and on Friday, the important one, the jobs number, the non-farm payroll, NFP, is on Friday before the market opens. This market is addicted to headlines. Accurate or not, they are driving prices temporarily. So the charts will help me guide this messy reaction to the temporary disruption of the headlines. My plan this week is to watch the price action at the important levels I just went through. So go back and watch the video if you missed them. And I'm also going to watch how the VIX behaves. If it drops into the 14s again, I will redeploy my VIX trades. I will sell puts or put spreads in the VIX to finance a call purchase for 60 or 90 days out. I also think that it would be smart to check on Bitcoin every once in a while. So to me, it represents risk appetite. And if it's still breaking out, then there is no fear, really. Markets are not scared if they buy up frothy things. And Bitcoin is perceived froth. This is an important week, so I'm going to do an update in the middle of it.